The average content creator is leaving $27,000 a year on the table through tax mistakes. You are genuinely talented. But the financial side of your business? It's held together with vibes and a prayer. You've probably felt this before. You check your bank account after a great month of brand deals, ad revenue, and product sales, and somehow you have less money than you expected. You made 6 figures last year. You should feel financially secure. But instead, there's this low-grade anxiety every time tax season rolls around, and you're not entirely sure why. The average content creator is leaving $27,000 a year on the table through tax mistakes, missed deductions, and financial blind spots they don't even know exist. Today, I'm going to show you the 3 biggest ones and exactly how to fix them. Here's what I see every single day working with creators. You are brilliant at what you do. You can edit a video that holds attention for 20 minutes. You can build an audience from nothing. You can negotiate a brand deal at 2 a.m. You are genuinely, objectively talented. But the financial side of your business? It's held together with vibes and a prayer. And I'm not saying that to be harsh. I'm saying it because the creative brain and the accounting brain are rarely the same brain. We got into this to create, not to reconcile spreadsheets. That makes perfect sense. But here's what it's costing you. First, taxes. Most creators are overpaying because they don't understand how deductions actually work. They're either missing deductions entirely or they're terrified to claim legitimate ones because they don't want to get in trouble. That fear alone costs the average creator between $8,000 and $15,000 annually. Second, sales tax. If you're selling merch, courses, digital products, or even certain types of sponsorships, you may have sales tax obligations in states you've never even visited. This is called Sales Tax Nexus, and most creators have never heard of it. But ignoring it doesn't make it go away. It just makes the penalty bigger. Third, bookkeeping, or more accurately, the absence of bookkeeping. When your system is a shoebox of receipts and a vague memory of what you spent on that camera lens, you are guaranteed to miss deductions, miscategorize expenses, and make decisions based on incomplete information. Combined, these 3 blind spots cost creators anywhere from $15,000 to $40,000 a year, not because they're careless, because nobody ever taught them this stuff, until now. Most financial advice for creators sounds like this. Just hire an accountant or use the app to track your expenses. Those aren't wrong, but they skip the part that actually matters. The real problem isn't that you don't have an accountant. The real problem is that you don't understand the 3 financial systems your creator business needs to survive. And without understanding them, even a great accountant can't fully help you because they don't know what they don't know about your business. Here's what I mean. A traditional accountant looks at your books once a year, files your return, and moves on. But a creator's financial life is weird. Your income is wildly inconsistent. You have expenses that look personal but are actually business. You sell digital products across 30 states. You get paid in 14 different ways. AdSense, Patreon, Stripe, direct deposits, crypto, wire transfers from overseas brands. So what I'm going to walk you through today isn't just get an accountant. It's the 3 financial blind spots that are specific to creators and the exact framework to fix each one. These are the things I see every single time a creator books a call at Numeratus. And once you understand them, everything changes. Let me tell you a story about a creator I worked with. Let's call her Mia. Mia runs a lifestyle and wellness channel. About 400,000 subscribers. She's doing very well, pulling in around $180,000 a year between ad revenue, brand deals, and an online course she launched. Mia came to me because she owed $43,000 in taxes she wasn't expecting. She was panicking. When we dug into her situation, we found 3 things. Number 1, Sales Tax Nexus. Mia's online course had been selling in 38 states for 2 years. She had no idea she had sales tax obligations in most of them. The thing about Sales Tax Nexus is this. It's not about where you are. It's about where your customers are. If you sell a digital product or physical merch and you cross certain revenue thresholds in a state, sometimes as low as $100,000 in sales or 200 transactions, you are required to collect and remit sales tax in that state. Mia had been ignoring this completely, not maliciously, she just didn't know. And because she didn't know, she had 2 years of uncollected sales tax she now was personally liable for. 2, her bookkeeping was a disaster. She was categorizing everything as business expenses into one giant bucket. Camera gear, software subscriptions, her home office, meals with collaborators, travel for content, all dumped into one line item. That meant her accountant had no visibility into what was deductible what wasn't, and what could be optimized. Number 3, she was missing over $22,000 in legitimate deductions. Her home office deduction was wrong. She wasn't deducting a portion of her internet, her phone, or her utilities. She wasn't tracking mileage for content-related travel. She had no idea that the music licensing fees, stock footage subscriptions, and editing software she was paying for were all deductible. She wasn't deducting the cost of products she reviewed and gave away. She wasn't even deducting her own course platform fees. When we fixed all 3 of these, set up a proper sales tax compliance, restructured her bookkeeping, and captured every legitimate deduction, her effective tax burden dropped by $27,400 in the first year. It's not a hack. It's not a loophole. That's just doing it right. So here's the framework. 3 financial blind spots, 3 fixes. Let's go through each one. Blind spot number 1, clearly it's the sales tax nexus. Do you sell anything online? Merch, courses, templates, presets, ebooks? If yes, you almost certainly have sales tax nexus obligations you're not meeting. Since the 2018 Supreme Court ruling in South Dakota versus Wayfair, states can require you to collect sales tax even if you have 0 physical presence there. The thresholds vary by state, but the most common trigger is $100,000 in sales or 200 transactions in a state within a calendar year. If you're a creator selling a $47 course and you've had 200 students in Texas, you now have Nexus in Texas. Yeehaw! You need to register, collect sales tax, and remit it. Here's the fix. Step 1, identify where you have Nexus. Your payment processor, like Shopify, Gumroad, Teachable, whatever, can generate a report showing sales by state. Pull that report. Step 2, register for sales tax permits in the states where you've crossed thresholds. Step 3, set up automatic sales tax collections on your platform. Most platforms handle that natively. Step 4, file on schedule. This is monthly or quarterly depending on the state. Word of caution, if you sign up for a sales tax permit in a state that you don't technically owe in, you will have to file 0 return reports because you signed up. Do not do that. If this feels overwhelming, it shouldn't. This is a one-time setup that takes a few hours, or your accountant can handle the entire thing if they want to. But ignoring is not a strategy. States are actively auditing online sellers. Penalties include back taxes, plus interest, plus fines. Don't be Mia 2 years from now. Blind spot number 2, bookkeeping basics. If your current bookkeeping system involves scrolling through your bank statements in January, and trying to remember what that $347 charge from last March was for, we need to talk. Bookkeeping isn't optional once you're earning real money from content creation. It's not about being good with numbers. It's about having a system that gives you visibility into your business. The fix is simpler than you think. You need 3 things. First, a dedicated business bank account. Stop mixing personal and business transactions, period. This is the single most important thing you can do. Every dollar of business income goes in, every business expense comes out. Clean separation. Second, get a bookkeeping tool. You have QuickBooks Online, Xero, or even Wave if you're just starting. The tool matters less than the habit. Categorize every transaction weekly, not monthly, not quarterly, weekly. It takes 15 minutes. Third, a chart of accounts tailored to creators. This is where most creators go wrong. The default categories in QuickBooks weren't designed for you. You need categories like camera and equipment, software and subscriptions, content production, travel for content, home office. When your categories match your actual business, your deductions become obvious and your tax prep becomes seamless. 15 minutes a week. That's all we're asking for. That's what separates creators who overpay by thousands from creators who have complete financial clarity. And our last blind spot, deductible expenses creators miss. I'm about to list deductions, and I guarantee at least 3 of them will make you say, wait, I can deduct that? A home office deduction. If you have a dedicated space where you film, edit, or manage your business, you can deduct a proportional share of your rent or mortgage, utilities, internet, and insurance. The IRS simplified method allows $5 per square foot up to 300 square feet. That's $1,500 right there with 0 MAP. Equipment and gear? Cameras, lenses, lighting, microphones, tripods, SD cards, hard drives, monitors, all deductible. You can often deduct the full cost in the year you purchase it, rather than depreciating it over time. Software and subscriptions, Adobe Creative Cloud, Final Cut Pro, Canva, Notion, scheduling tools, analytics platforms, your course hosting platform, all deductible. Music and licensing, Epidemic Sound, Artlist, stock footage subscriptions, all deductible. Internet and phone, the business use percentage of both is deductible if you use your phone 70% for business. Content creating, managing DMs, scheduling posts, 70% of your phone is still a deduction. Travel for content, flights, hotels, meals, and transportation. When you're traveling specifically to create content or attend creative events, all deductible. If you purchase products to review or feature in your content and you don't return them, that's a business expense. Meals with collaborators. Business meals where you're discussing content, partnerships, or strategy, that's a 50% deduction right there. Health insurance premiums. If you're self-employed and pay your own health insurance, you can deduct 100% of your premiums. This one alone can be worth $6,000 to $15,000 a year. And then there's the self-employment tax deduction. You can deduct 50% of your self-employment tax from your adjusted gross income. This isn't a hack. It's literally written in the tax code. The average creator I work with picks up $12,000 to $22,000 in deductions they weren't claiming prior. Not because they were trying to cheat the system, because nobody told them that they even existed. Now, some of you are thinking this sounds great, but I barely have time to edit my videos. How am I supposed to do all this? Fair, and here's my honest answer. You don't have to do it all yourself. The bookkeeping habit, yes, 15 minutes a week is non-negotiable. That's yours. But the sales tax setup, it's a one-time project. The deduction strategy, that's what an accountant who actually understands creative businesses is for. The key there is understanding creative businesses. Because if you go to a general accountant and tell them you deducted your ring light and your Epidemic Sound subscription, they might push back. Not because it's not legitimate, but because they don't understand your industry. You need someone who knows that a $2,000 camera is a business expense when your business is making videos. Others might be thinking, I'm not making that much money yet. Does this even apply to me? If you're making $30,000 or more from content creation, yes. At $30,000, the deductions alone could save you $5,000 to $8,000 a year. At $100,000 plus, we're talking $15,000 to $30,000 in potential savings. The earlier you build the right financial systems, the more money you keep as you grow. And if someone's thinking, I've been doing this wrong for years, am I in trouble? Not necessarily. You can amend previous tax returns up to 3 years back to claim missed deductions. And for sales tax, most states have voluntary disclosure agreements that reduce penalties if you come forward proactively. The worst thing you can do is continue ignoring it. Being creative and being financially literate are not opposites. You don't have to choose one. But right now, most creators are accidentally choosing creativity and ignoring the financial side. And it's costing them tens of thousands of dollars every single year. Understand your sales tax nexus. Build a simple bookkeeping habit. And make sure you're capturing every deduction you're legally entitled to. If you found this useful, subscribe to the channel. We break down videos like this all the time. And if you're a creator who wants a professional team that actually understands your business, check the link in the description. Book a call with newarartist.us and speak to me. We work with creators nationwide and we speak your language, not just accountant jargon. Drop a comment and tell me, what's the deduction on the list that you don't know about? I read every single one.